Now, some high-profile examples of macro are the following. These are the things that basically you read about not only in the business newspapers, but in pretty much every major newspaper. And these are things that hit the front pages of not only business news, but general news. And this includes the European sovereign debt crisis, and this is a picture of all of these countries sucking the lifeblood of the euro out of the euro. And unfortunately, I would say that in some ways, some of them are still doing so. There's still an issue for the eurozone. They still continue to be sucking the lifeblood of the euro. Of course, it is no longer as much of a persistent risk than it was in the past, but it can come back upon us. But if you remember, the European sovereign debt crisis was something that crippled not only the euro, but I would say in some ways the general markets for months. And it was a massive driver of currency flows. So, very, very important to pay attention to and to keep in mind. This will unfortunately come back to haunt us in just a couple of months, which is part of the reason why I believe that the Federal Reserve will delay tapering. And the reason is because we still have a great big uncertainty about what's going to happen with the debt ceiling in February. We've seen how things played out and how they did let the U.S. government shut down, how that impacted economic data, how that's probably going to impact growth in the month of October. We'll see that when next month's reports start to come out. But this is the GOP on the left, which is the Republicans, and the Democrats on the right, and they fought pretty much a death battle, and they took it very, very far, and held the financial markets hostage. And basically, currencies were frozen, in anticipation of whether or not they would this would be a death match to the very bitter end, or someone was going to blink, and thankfully someone did blink, or both sides blinked, and we had a resolution. But this is going to come back to haunt us in the beginning of 2014, and it will be a macro factor that supersedes improvements or deterioration in economic data for any country, and just impacts how the market feels in general. And I think a really good example of that is how the euro rallied throughout September into October. Not because European data or the Eurozone economy was really getting all that much better. In some ways, I would even say that those economies data still remained mostly weak, and yet those currencies, the euro continued to rise because no one wants to own dollars, and that was a consequence of this debt battle, and had nothing to do with economic data. It's not so much a geopolitical or political risk that we're worried about. China can also play a quote-unquote macro factor on the markets by the way they allow their economy to slow or grow. The whole idea here is that China is the world's second largest economy, and if China slows materially, it's going to be something that impacts all of the global economies, and it can have something and can completely overshadow how individual countries may be doing. So all of these factors, basically all of these factors in terms of macro, are things that can help shape or determine a trend in the currency market. They are the things that can determine where currency goes for not days, but potentially weeks and months at a time. Whereas on a shorter term basis, what we focus on is micro. But before we get to that, I do want to mention that when it comes to macro, whenever there's an uncertainty, generally speaking, of course it's not always the case, but generally speaking, currencies, markets, evade risk. And so they'll sell first and ask questions later. And those times what you'll see is that capital will seek for stability. So you'll end up seeing a flight to quality when we have these kind of exogenous shocks. On a day-to-day basis, however, what impacts currencies on a fundamental basis is micro. And micro pertains to economic data that is released on a regular basis. Of economic reports, I think that the most important are basically the following. The first one is employment, and I'm sure that all of you are intimately familiar with the fact that there's nothing as important as non-farm payrolls to the financial markets, and we've got non-farm payrolls scheduled for release next week. It will be a very, very important release, and I'll explain why. Next to non-farm payrolls, the ISM or PMI numbers are also very, very important. Consumer spending is basically the backbone of all major economies. So without consumption, there's very little growth. And without growth, it'll be very difficult for us to justify easing or tightening. Growth is also important, and of course, inflation. Inflation is less important these days than it was in the past because inflationary pressures around the world are so low. But there will be a time when inflationary pressures have come back to haunt us. And when they come back to haunt us, it will be a more significant topic of discussion, and the market will have much more greater sensitivity to inflation numbers. So in terms of the employment report, why is the employment report so important? The employment report is important because more jobs means more income. More income means more spending, and more spending means more growth. And in general, I would say that in the G3 economies, consumer consumption represents 60 to 70% of GDP growth. So that is why the lack of job growth is also such a big concern for the global economies. ISM and PMI surveys measure the health of businesses in the manufacturing and the service sector, and usually they're the most kind of timely piece of data that we get. A lot of the other pieces of data that we get on a month-to-month basis is for the month prior, whereas the PMI and ISM numbers are usually for the month that we are currently in. So, for example, on Friday we get the tomorrow's a day of ISM and PMI reports. We've got ISM numbers from the U.S., the manufacturing ISM report. We have PMI numbers from Australia, the UK, Switzerland. So, all of these are very, very important because they give us the first taste of how the economy is doing in the month of, those economies are doing in the month of October.